Topic number two, inflation is very much on the rise. The data shows that the prices for goods and services rose by 5% from a year ago at the same date. So in May, the inflation for this month relative to last year in May, we're up 5% higher than it was. So that's the largest increase in the CPI since August 2008, which was 5.4%. So there is inflation. I don't think anyone debates that there's inflation here. And the core price index, which excludes often volatile categories of food and energy, that jumped by 3.8% in May, which is the largest increase since June 1992. But again, no argument there's inflation here. I think the big argument is if the Fed's theory that this is transitory, that this is temporary, and that it's okay to let it run because we're making up for the shortfalls in employment, and this is going to help balance out the economy post the pandemic kind of society here. And the other camp is that, well, that might be true, but we need to start weaning ourselves off of this because we're going to start to see hyperinflation. We're going to start to see the prices go through the roof. I think Costco shows like 4.7% inflation in their products. So like we're seeing it. It's just the argument of whether or not this is something that's going to leave or if it's something that's persistent. And one of these things, like for instance, the Fed is buying $120 billion of treasuries and other assets in the markets per month, which is part of the quantitative easing. They also keep interest rates low, so borrowing is easy, and they're pumping capital into the market with the objective of really stimulating the economy. But if you just keep giving money and stimulating the economy, people will use that money to buy things that will artificially inflate prices. And if inflation gets too high, the value of the dollar begins to decrease, because that's how you look at inflation. You can look at an increase in the price of goods and services, or you can look at it as a weakening of the US dollar. So depending on your perspective there, because in both cases, the same thing. Either goods become more expensive, so money buys less, or money is weaker, in which it can buy less goods. So it really depends on but both are basically true. And this is really they say it's a period of normalization. So high amounts of inflation is prices returning back to a normal state pre-COVID existence. But the question is, okay, well, how does normalization last, and when does that turn into something that might hurt us and turn into high inflation or turn into something that we won't be able to stop just by monetary policy? We don't want to pull the ripcord too hard and let the economy just run away with all this stuff until it pops up. So, but the numbers today, definitely inflation is there, inflation is on the rise, and the arguments are, is it transitory? Will it go away? Is it here to stay? And how long can we sustain it before it becomes a problem? And that's kind of the current debate right now. But inflation is definitely here. Things are more expensive.
So then, I mean, obviously there's a progression of inflation, whether it was before COVID, during COVID, due to scarcity of goods or high demand. What type of inflation are we currently looking at, and is this any effect from the COVID period?
No, it's 100% the effect from the COVID period, and that's why the Fed is not trying to change their monetary policy. They're like, prices are going up because people are spending more. There's a lot more demand. Everybody wants to go out and go on vacations. They want to do things they didn't want to do before just because they couldn't do it for the last year.
Yeah.
So people are more willing to pay these prices because they're more excited to go outside. And you see this in the stock markets as well. There's a lot of people have said there's a lot of stimulus money that people are just using to go and play in the stock market, right? To buy stocks. So people are using a lot of that stimulus money and are trying to push up prices, whether they intend to or not. And also you have the supply chain issues, right? Making things more expensive in general. And then you have issues overseas with Russia dropping off, like we said yesterday, Russia dropping off the $45 billion of its U.S. reserve currency and trying to move away from U.S. dollar denominated oil contracts. Symbolic at the moment, but if other countries get involved who own more of it, that could also hurt the dollar. So, inflation on a weak dollar needs to be kept in check, especially now that we're entering into this campaign of competition against China, where we have like this tech race now, as opposed to a space race with the Soviet Union. Now we have a tech race with China. So these things are going to become more important, and so inflation is definitely something that we should be watching every single day. We'll be talking about it as often as necessary.